Hello traders, hope you are all doing great, and this is Umar with you. And what a perfect opening, right? So this is what we were afraid of. So this is why we were telling not to trade in uncertain times, right? See what is happening in the market. Markets are today's gap down, which was 350 points gap down, is how to say, is one of the rarest, like it doesn't happen continuously. Of course it is uncertain times, and we have Russia and Ukraine problem, and yesterday US markets were closed because of this thing, President Day. So today morning we opened and I saw, it was very surprised that I couldn't believe that Nifty had gapped down 350 points. And at the end of the day, what happened is, once Europe opened, we reversed back, and the gap which was formed was kind of filled today itself, right? So this is the reason why we are not trading uncertain times. This is very dangerous. And if you see, I can show you some chart patterns here, which I think Nifty is kind of, if you see this, I'm sure you can see this one. Let me show you. Yeah. Yeah. So if you see this, sorry, if you see this Nifty chart pattern, there is a strong support at 16,800 levels. Now on 26th of November, one second. One second, guys. I think we are having some technical problems. Just me let. Yeah, sorry, we had some technical issues, I think. So it's okay now. So this is the reason we were telling, right? And if you see this chart pattern, which I am going to show you, this chart pattern, if you see here, this 16,800 is acting kind of good support. Now, on 26th of November, we saw Nifty coming to 16,800, then bouncing back. Then second attempt was done on 20th of December. Then third attempt was done on 25th of January, and fourth attempt was done on 14th of February, and today is the fifth attempt. Now we gapped down, we went to low was around 16,850, then high was how much? 17,148, around 350 points gap. Actually the gap was filled today. If you see the low and high, today's gap down was filled today itself. So that's why we say every gap is formed to be filled. Unfortunately, I've been telling you not to trade in this uncertain times, and we never traded. This is why we don't trade uncertain times. You don't know what is going to happen, and we made profit also. If you ask me how, see, let me put it this way: taking no trade is also a good trade. Had I taken some position today, I would have been in big loss because of this 350 points gap down. That's not a small gap down, more than 350 points. I haven't seen a 350 points gap down in the near future, and tomorrow we really don't know what is going to happen, what is going to be the scenario. Markets are highly volatile, right? So you shouldn't be trading this thing, markets, as of now. And open interest, it is scattered everywhere, and I don't want to talk about the open interest now. And we are having our own problems. If you ask me now, on December 8th, sorry, on March 8th of March, RBI has told they are going to do a rupee dollar swap, which might it may depreciate a rupee value. So that is a problem. People are not concerned about that. going ahead, after that March 15th, I think from March 10th to March 15th, Federal Reserve will come out with interest rate hike. People are not concerned about that. Then we have Omicron issue, that and this, and above all these things, we have the LIC IPO. If you see the LIC IPO, LIC IPO is kind of freaking out. It is, if you know, LIC is the biggest insurance company in India, which is having more than 60% market share. Now, a big guy coming into the market, people analysts say it may pull liquidity out of the market. Now, say for example, SBI Life is down by 10%. Its competitor, direct competitor of LIC is SBI Life, which is year to date down by 10%. ICICI Prudential down by 10%, HDFC Life down by 10%. So all these companies are down by significantly for year to date because of LIC issue, maybe because of LIC issue. Now it is pulling liquidity among insurance company. We really don't know if it is going to pull liquidity out of other companies, maybe FMCG, maybe autos. We will have to wait and see. If LIC is having a great valuation, maybe this liquidity issue will come, and I don't know how how this RBI or SEBI is going to manage this. And SEBI, this government of India desperately wants 5%, is selling 5% of LIC because they need cash. That's the reason, right? They are in hard need of cash. That's why they are selling LIC IPO. So going forward, we might have a patchy ride. We are having a patchy ride. In fact, we are having a patchy ride. I haven't taken any trade because we expected these kind of things will happen. That's why we didn't take any trade. The last trade we took was on I think 17th or 18th, last expiry. That is last Thursday was our last trade. Apart from that, and I'm telling you, even now we are down by 1%. That's absolutely fine. We can manage drawdown of 1%. We cannot manage 10 or 15%. Now this gap down, if I would have been in trade, would have caused a big dent to my trading capital. My trading capital would be down by at least 5 to 7% today if I would have been in the trade. By God's grace, we are not in the trade. And even though we are not in the trade, what I see is this India VIX is also gone about 25%, 25, and we don't want to trade if India VIX is above 25, right? So that's our policy, that's our this thing. That's our discipline or whatever. And FIA data is also out, and 3,245 crores FIIs have sold in cash provision, and DIIs have bought for 4,108 crores. No matter whatever happens, FIIs are keep on going to sell. So that's what is happening for the last 1 year, right? So it is advisable to stay out of the market. No problem. Markets are going to be here. We are going to be here. This war and this panic situation is just temporary. It is not permanently going to be here. It is okay if we take 10 days rest. It is okay if we can have a good night's sleep. So that's the reason we were telling not to trade, right? So nothing much. So that's why I want to advise you, trade safe, and there are lots of events coming up. So we are going to have a rough ride, and even though we are going to have a rough ride, I advise not to trade if India VIX is going above 25. I think today itself it's gone about, it's 26.60. So I advise not to trade as of now. If India VIX goes below 26 or 27, 20, you can come back and trade. So that is the best thing we can do. So I hope you enjoy this video. Thank you for watching. Take care. Bye.